What's up, guys? I hope you're all doing well. So, in this video, I will go through yesterday's price action, namely which has been on Friday, the 17th of December. And in this video, I will go more in depth to my entries. I will show how do I execute them, how do I build the narrative of the trade, and I will talk through some targets. Even though my target yesterday wasn't really according to my plan, but I didn't really want to be greedy since it was Friday, almost Christmas and all that. But just before we get into the whole explanation of yesterday's price action, a little disclaimer to you guys. If you're not in the position just yet to be consistently getting into those trades using 1 minute time frame, don't really rush the process and don't really drop down to seconds time frame just yet. Okay, because since the market is fractal, you still will be looking at the same things on 1 minute so as on seconds time frame, but the whole difference is that you need to know when you should be applying those seconds time frame. And you need to understand that the price doesn't really look good on seconds. And it might be confusing to you. And sometimes you can even misunderstand where the high and the low are, which means that your chalk will be either not valid or you will miss it and the price will just go without you, right? So yeah, I kindly recommend you to trust the process and take your time. Like these concepts and the opportunity to entry from seconds time frame will there be, even though if you will take time like 1 year from now. Just trust the process and take your time. Don't rush it, right? Take your development to the position that you will be getting better and better 1% at a time or one step at a time. Okay, and then you will definitely be pulling great trades and be the best version of yourself, because we don't really know what our ceilings in this industry are, which allows us to be great and to consistently improve ourselves. Okay, and the last but not least, since I have much more free time just now, I am providing some 1v1 calls. So if you're interested and you think I can help you, either that structure or liquidity concepts or entry concepts, like you name it, if you think I can help you, then drop me a DM and we will sort the things out. Okay. But as for now let's get to the top-down analysis. So I started my day from daily, and as you can see, and as you probably know, I'm trading only US dollar, which was significantly dropping the last, 3 months from October to December. And as you can see, we were now in this kind of situation, right? This was a range that we had the last 2 weeks. Yep, 2 weeks. And we have this demand that is refined on 4-hour or 15 minutes, if I'm not wrong. And this demand has been tapped in 3 times in a row. And as you can see, we have failed to bring the price higher. And that means that this demand is actually weak, and it was being used for one simple reason: to accumulate the liquidity below this lows, right? Which makes this low and this demand weak. And since we didn't really break this high or this high, these highs are, just for now, they are strong. Okay, so on the daily, I'm just looking at who is in control. Since we're bearish, supply is in control. At what stage the price right now is? Well, we were ranging, which means we were accumulating orders. We have tapped into the demand area 3 times. We failed to break higher, which means that we have now accumulated a lot of liquidity. So we may as well target this liquidity after we sweep, let's say, these highs and let's say these highs with the wick. As you can see, we have done it. So then I drop to not 15 minutes, 4 hour, and study the price from there. We have this drop to the downside, retracement, mitigation of this range, and a further drop down to the downside. But all these highs were then induced, and as you can see, we now have even break our structure to the upside, retraced once again. We have then mitigated this whole demand range. Actually, we have mitigated this whole. We have mitigated all this demand range. As you can see, here, and then went to mitigate this doji candle. We have swept this high and all these highs, which means that we have structural liquidity as our fuel to bring the price lower. Even though this whole move was somewhat corrective, we have then eventually broken this point of structure, which means that this high is now strong. This low, of course, is weak because it has failed to bring the price higher than these highs. And then since we have swept the internal range liquidity, we have then retraced back, sweeping these highs, mitigating something in here. It was, if I'm not wrong, 15-minute order block. But since we didn't really bring the price higher than this high, this low is now weak or targeted, which means that whenever price will go in to be heading down, then this low will more likely than not go. Okay, the price then retraces back to the downside, creates some inducement. We have this demand inside bar candle. The price reacts from it, but then eventually this candle was news. So, the news have created a bit more volatility. They have swept this liquidity, mitigated this demand that has actually been a catalyst to break this point of structure. Then we had some reaction to this order block, the supply that didn't really do much, but still. And the price has eventually come to the 3-hour order block I had marked out, this wick. I mean, of course, there are a lot of examples that there is something in the wicks always. And this was my supply going into Friday. And then, of course, I'm dropping to 15 minutes, or in this case, I have dropped to 10 minutes. But we will do something just now. We need to allow visibility for 10 minutes. I dropped to 10 minutes, and as you can see, we have mitigated the 3-hour order block. We have shown a change of character. As you can see, we have swept the high, then swept the low, and now we're watching and we're looking for the origin of the move that has created a change of character, and this is this candle for me. So I mark this candle out, and what I did next is that I have, let me bring the price a bit closer to here. Okay, so so I have refined that order block on 1 minute, and for me it was this candle, which was if I'm not wrong, 2-minute candle. But just for the sake of speeding up the video, I will just show it as 1 minute candle. And then we go back to 10 minutes, and the plan was that I will trade the order flow and I will trade the continuational type of model into that area. And as you can see, we have reacted off of something in here. So this was reaction to something on the left, and as you can see, this was these two candles. Okay, so if I was to make a line, you can see a bad line, but it has reacted to that. And then what we see next, we have this reaction to the supply, and then this range of two candles has actually taken out the supply and then impulsively went to the upside. So what I had done is that I placed my limit order just there, and the price then just went flying. Let's do slow, so let's make it to 10 minutes a bit, so it's going to be a bit faster. Then the price hit in the Asian zone, and then it has actually come to the point, oops, oh my god, to the point when we were really close to the supply, to both refined and 10-minute supply. And when the price, as you can see in here, it tapped our refined supply, I didn't trade this because I wasn't in front of the charts back to that day, but I drop at 5 seconds, and then I'm looking for mitigation of this order block. We have mitigated this order block. Liquidation of the highs. Well, we have liquidated these highs, and all the highs along the way. Then I need a V-shaped recovery, which we get just now. I'll actually mark this out. This is our V-shaped recovery, which means a strong rejection from the order block. And then we need a chalk and then a flip. Okay, and our chalk has happened. This is our high, chalk up, and then this is our low, chalk down. Where's my chalk down? And of course you can as well think that this is our chalk down. In this case, it doesn't really matter, because you can say that this is not a structural point, it is more so a pause in the market. And then of course we have this is our flip, this whole range of candles. This is our demand that got flipped. Demand. We have showed a reaction to this demand in here, but then this supply ultimately has taken the demand out, which means that we sell from this whole range, and then just 1 pip stop loss, and then the target in this case is going to be oh yeah, whatever. As you can see, the price then goes a bit higher and uses these highs as inducement, which is totally fine. But since we are in seconds time frame, we have room to breathe, and the price doesn't take us out and then just split on 1 minute, and then just goes for a run to the downside. Okay, and it was a great trade, but I didn't really take it because I wasn't at the charts at the time, and the logical target would have been a weak low, which is here. But if you're looking at more so higher time frame perspective, the weak low is right here, which means that you could have put your target at least at this level, which would have been a 123 RR. Okay, and just getting more so into the future, we know that the price right now is into this area, and this is a 111.4 RR trade. It was really clean, and I don't really think that you could have. Yep, as you can see, you don't really have an opportunity to execute it from 1 minute time frame, which is once again a beauty of those second type of entries. But other than that, let's move on and let's see what the price then does. It drops heavily, then reacts off this candle to the left, this inside bar candle, and then shows some reaction. Then, as you know, ranges for a bit, and then it was the moment when I saw this happened. And since we have broken this point of structure, I was more so at first looking at this supply with two refined order blocks, but then I have marked out this 10-minute order block, which was really clean, and then I have dropped to 1 minute, and I have seen that this refined order block on 1 minute has actually swept the liquidity and then pushed the price to the downside, which means that we don't necessarily need to come back and sweep these highs. Okay, like this is something that you need to pay attention to. Not every single high should be swept right away. Okay, you don't really need to be that cautious of like double bottoms, double tops, triple bottoms, triple tops, getting swept right away, because they will not be swept right away, which once again shows that you just need to react off of the zone, and if it shows the confluence that you need and you're looking for, then just trade it. And at the end of the day, if the trade plays out, then you win and you are in profit. If the trade doesn't play out, then you lose like 0.5 or 1% of your capital. Is that a big deal? Not really, right? So I have refined then my order block to this 1 minute candle that got engulfed with the next two. And just to speed it up, I'm waiting for price to actually come into the zone, and as you can see, we successfully come into the zone, right? And then I drop to 5 seconds. And here is something that is really interesting, okay? A lot of guys have actually asked me, why didn't I trade this high? Because you can see that we have definitely come in the zone that we have refined. We have a 5-second chalk in here, right? We have some demand reaction, and then it gets taken out, so we can sell it from here, right? But as I have said in my previous video, I guess, you don't really need to trust the first high, the first reaction high, which is this one. Okay, this is the high, the first reaction from the refined supply. And you don't really need to react, to trust it all the time, because sometimes it will fail. And it did so in this example. As you can see, the price then has ranged for a bit, then it kind of dropped, as you can see. So at this point I was still like, oops, oh my god, I was kind of thinking that I have, missed the opportunity, but then I have seen this reaction, not like this candle, but more so this reaction to the upside. And then I have then once again dropped to 5 seconds. We have then now fully mitigated the 1 minute refined order block. We have liquidated these highs. We have now V-shaped recovery, as you can see, in here, and then, oops, and then in here, not really, in here, okay? So this is our V-shaped recovery. Should be like that. So now we need a change of character, which you can already see that we have swept this high, and now we need to sweep this low. So we do so it in here. As you can see, this candle has swept this low, and now we need to see a flip. Do we have flip? Yeah, we have this demand that has brought the price higher than this high, right? And then we have this as our reaction this week, and these two candles, this is our reaction. And then this wick plus this high, this candle, they take out the demand, which means that this is our supply that we want to be buying from. So I waited for price to get back there and manually execute it. And as you can see, we then have some momentum, right? But since we didn't really break the structure just for now, I was waiting for something more valid, and this candle was the one that has actually broken this point of structure and this point of structure, which means that I once again manually executed. We had some inducement, and then it perfectly went to the downside. And the beauty of it is that on 5 seconds, these stop losses, they're actually looking like they're huge. So in this case, we could have had just, I don't know how many pips is that, and in this case it could have been like this. Let's see how many pips is that. 0.5, 0.5. I mean, that's insane, right? But just because, when you're trading demo, you are having like 0.3 spread on EU, if I'm not wrong, it is really risky to have this type of stop losses. So of course I would be more so happy with 1 pip stop losses, which are now 1 pip stop losses. Yep. And then I get just on 1 minute and just look the price go to the downside. And whenever we see that, whenever I saw that we have actually broken this point of structure, oh my god, we have broken this point of structure and we have reacted to this demand, but then have successfully broken, I have moved my stop losses to break even. I didn't really take partial just for now because I was more so concerned that we would have dropped down heavily, because we were ranging for the whole week and we had some weak lows on our way, and my target was this demand with 50 RR target, if I'm not wrong. It was something like 30, 50. Maybe this demand was, I closed at 50 RR. If it was this demand right here, yeah, it was this demand actually right here, because it was the part of supply chain. It was this demand right here. Oops, like this. So it was this demand right here because it was building some demand chain, okay, in here. So I decided to put my take profit at this level because I was cautious that we will actually react from this demand and then sweep these highs, mitigate something in here, and then we could have dropped heavily. Okay, so this was my anticipation, which of course, as you know, has failed, but then the price has moved down with some aggression, and as you can see, this demand has actually given a great reaction. But then of course we ask, why does this demand give reaction when we have a supply control based environment? Well, to accumulate the liquidity below these lows, and then the price has dropped once again reacted to this demand heavily. Why? Well, because we need liquidity. Accumulate liquidity, drop down to sweep it. And if you actually pay attention to this, maybe 3 minute, maybe 5 minute, 4 minute. Yeah, not really. Well, we have a reaction to the demand, and then we have these buy to sell wicks, as you can see, which we can then refine to 1 minute. Let's stop on 1 minute. It is going to be ultimately this extreme. And then if we are to drop on 5 seconds, let's look for some entries. Let me bring the price a bit forward, backwards to here. 5 seconds. And then, yeah. So what do we have here? We have our reaction high failed, as you can see. We have then no change of character in here, so we wait. We have our high, we have our change of character in here. So now we anticipate the price will actually bounce back down from this area because all these highs are inducement. And as you can see, once again, if you want a confirmation entry, well, we have come into this area. We have this demand in here. This demand gave us a reaction. Then it got broken with this candle. These highs were used as inducement. This was the last range of supply that, as you can see, held, and the price just moved to the downside from there. Okay. Oops. So if you want me to mark this out, this is our refined entry supply. We have our change of character, chalk up. We have our change of character to the downside. We have our V-shaped recovery. We have our inducement in place in here. Inducement, so we can sell surely from here. And 1 pip stop loss. Yeah. And any target. Okay. If you're still not sure, well, once again, change of character. So as the demand to supply flip, aggressive reaction. This is our range of supply, and then boom. Okay. So it doesn't matter what time frame you are applying. It will always be the same that you will be looking at. Either that 5 minutes, 12 minutes, 15 minutes, 4 hours, 1 minute, 1 second. The price and the market is fractal, so that means that we will be looking at the same time all over the time frames. The same thing all over the time frames. And then the price, once again, does its thing. And at this point, I was not in the markets because I was disappointed and I was satisfied with my 50 RR. But as you can see, the price has now come back to this point, and my trades would have been 93 RR plus, let me actually do it this way, 93 plus 95, which is almost 200 RR, and I secured a quarter of it, which is totally fine, because at the end of the day you must not be greedy, and you need to secure your capital, and yeah, it is what it is. Next time maybe I will be lucky and I will get that 100 or 200 RR trade. But just for now, I'm really excited about my 50 RR. So yeah, this is the trade recap. I think I have went about everything pretty much clearly, and I hope that there won't be any questions that you might have after this video. If you still have, then DM me in my Instagram. I will make sure to answer all of them. And yeah, I hope this was a really helpful video for you. But once again, don't really jump into seconds time frame that fast, because you need to master 1 minute time frame just for now and take one step at a time. Okay, so yeah, this is it for me. This time this is not a 50-minute video, just 30, so I'm taking a big progress in making my videos shorter but still as helpful and as informative as they can possibly be. So yeah, I hope you are going to have a good day, and I'm pretty sure I will make some videos this week. So yeah, stay tuned for that, and have a good day. Bye.